Currently, there's this new narrative in the crypto market that the Bitcoin price will go up in the next couple of days. This is due to the narrative of the Santa rally, which often happens in the stock market. But will this year bring the same sentiment? Will crypto go up in the next couple of days? If you are curious on the answers, well, stay tuned. Hey guys, welcome back to the Republic Labs YouTube channel. In this video, we will talk about the current sentiment of the Santa rally and will this push the crypto market up. But before we start, don't forget to like, subscribe, and click that notification bell so you guys are notified when my next upload. Without further ado, let's talk about it. So if you don't know what the Santa rally is, it's basically a narrative that happens during Christmas, inspired by Santa Claus. So essentially, a lot of traders in the stock market correlate the Santa rally with Christmas, because the narrative is that Santa will bring new positive sentiment for the market. This is due to a pattern that is happening in the stock market in the last couple of years. Because during the last days of December, especially after Christmas happens, the market tends to go up. The narrative is set on the stock market. However, because of its popularity and the current innovation in the market, the effect has transferred into other riskier assets in the market, one of which is crypto. So this means that a lot of people are expecting the same effect on the stock market to the crypto market. To get answers whether the Santa rally will happen and will affect the crypto market this year, we need to take a look at some data. The first one is the derivative data from traders and investors from retails and also institutionals. The first data that we need to take a look at is the Bitcoin return, assessing the current sentiment in the market. As you can see here, Bitcoin quarterly returns is currently the worst performing yet since 2018. As you can see here, the fourth quarter of 2025 has given a return of around minus 22.47%, which is the worst since 2018. As you can see here, the worst fourth quarter of the year belongs to 2018, with a minus 42.16%. The loss in 2018 was due to the bear market, while also damaging the sentiment and the belief of all traders and investors in the crypto market. So currently, the same thing is happening, which is why there's not much positive sentiment or beliefs in the crypto market. However, to be sure of the daily return and the Santa rally effect, we need to take a look at the daily returns in December. As you can see here, comparing the daily returns of December among years, we can see that the Santa rally is not really quite significant because most days are still volatile. As you can see here, from 2013 to 2024, volatility still exists, even after Christmas. There are still losses and gains, with returns showing green and red overall. So this means that the Santa rally will not give essentially all green candlesticks or all positive returns. So this means that volatility still exists and the effect of Santa rally is not really quite significant, because there are still up and downs in the market. So this is expected to also happen this year, with the last couple of days of trading in 2025 being red and also green. To be more sure about the market, we need to take a look at derivatives data, specifically the open interest ratio, comparing crypto options open interest and crypto futures open interest. You see, this data tells you the sentiment of traders in the market, where if the ratio goes up, this means negative sentiment in the market. But if the ratio goes down, this means that the sentiment in the market is quite positive. This is because when the ratio goes up, this means that crypto options open interest is higher than crypto futures open interest. When crypto options open interest tends to get higher, this means that a lot of people or traders are usually hedging. When more people hedges, this means that the condition in the market is not really positive, and people are expecting volatility or even a downtrend. So this means more hedging means less confidence in the market. But an increase in open interest in the futures market tells you that traders are confident, because the futures market tends to be used for profit, especially utilizing leverages. So currently, the data shows that the ratio is increasing, meaning a lot of people or traders are hedging instead of finding profits, telling you that there's less confidence in the market right now. So this means that the sentiment is not quite positive. However, if we take a look at funding rate data in the futures market, we can see that funding rate is increasing, meaning a lot of people are using leverages. However, while funding rate is increasing, the volume and open interest in the futures market is still down. As you can see here, the open interest is currently down and volume is also down, which tells you that traders are not really confident yet in the market. So this means that the overall sentiment in the market is not quite positive and is still volatile, which means that sentiment in the market is not really bullish. So the effect of sensor rally might not come to fruition. Looking at the inflow and outflow data, as you can see here, currently there's more outflow than there is inflow, which is good, which means a lot of spot investors are holding rather than selling. However, the difference is so minimum that the effect is not really significant, which means that this positive sentiment might not leave a big impact in the market, lessening the possibility of the sensor rally. Also, if you take a look at institutional transactions, as we can see here, institutional investors are selling their bitcoins through their ETFs. Even BlackRock, the ones that usually buys all the ETFs, are currently selling, which is currently experiencing a net outflow in the last 7 days. So in the last 7 days, most institutional investors are selling, which tells you that they don't believe in this week's positive sentiment. Since the sensor rally will happen this week, they might be pushing the price lower before buying it upwards, or they just genuinely don't believe in the current market positive sentiment. However, taking a look at market dominance, as we can see here, the current Bitcoin dominance is going down and Ethereum's dominance is going up, which tells you that there's a possibility for a rally but for altcoins only. However, if we come back to the open interest data and volumes data, currently Ethereum's open interest is also lowering or decreasing, which tells you that traders are not really confident yet, which means that the possibility of a sensor rally is currently little. However, for all of you long-term holders, currently the sentiment of the Fear and Greed Index is at an extreme fear condition, which tells you that currently it is a good time to plan to buy. Because when the market tends to be at an extreme fear condition, price tends to go down, and it is a good way to buy low, and then potentially sell high in the future. Shifting to macroeconomic sentiments, as you can see here, the current sentiment of the macroeconomic condition of the global market is not really positive. The Federal Reserve has just cut their interest rate. However, while this was the most awaited sentiment in the market, currently it has no effect in the crypto market. This is because a lot of traders and investors tends to now want to see the US economy becomes better rather than seeing the federal fund rate go down. However, there's still a misalignment between the fiscal policy and the monetary policy, with Donald Trump promising that the next couple of months, specifically next year, will bring a new golden age for the US economy. But people are not believing it, because Trump has a dovish policy stance, while Jerome Powell has still a somewhat neutral stance. This also tends to create political uncertainty, which is why a lot of traders and investors are currently in a wait-and-see condition. You see, Donald Trump wants to push more liquidity into the market, essentially creating a dovish narrative. However, Jerome Powell is not sure yet, because he sees the economy as not really better yet. With job openings not really increasing significantly and inflation still tends to go up, while also having a high unemployment rate, Jerome Powell is worried that the economy might not be able to absorb the dovish policy, which can create more inflation in the long run. So essentially, the macroeconomic condition is not really looking good for the US, and since the US has the highest volume in the crypto market, this tends to impact the market significantly. Also looking at Japan, currently the interest rate has gone up again, which takes a toll on carry trades. As you can see here, because of the interest rate that is going up, currently liquidity has been lessened because carry trade is being rebalanced. So overall, the condition of the market is not really positive, which is why I'm not really bullish on the centrally sentiment. Also, looking at the technical factors, currently Bitcoin has not really confirmed going above the exponential moving average and also the relative strength index indicator. Also, it has broke out of its current uptrend and is currently retesting to go lower or to a consolidation. Hopefully I'm wrong, but currently the market is not really looking positive. So if you guys want to believe in the centrally narrative, I suggest you not FOMO into everything and restructure your risk management strategies. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when my next upload. Cheers, guys!